Hello and welcome. It is the weekend, first weekend of summer, Northern Hemisphere 2019. My name is Derek and welcome to the Money Charts channel. I'm basically just going to go over what I think is going to happen. And it's going to relate to the banking system, gold and silver. After all, it's a gold and silver video, so I'm going to transition into such. So whatever you do is whatever you do. I'm just basically telling you what I think I'm doing. What I know, I'm not. What I'll be. I'll state what I'm doing, but I think what's going to happen, basically for the rest of the year and into the next decade. Well then, Deutsche Bank. This thing might be under $1 before the first NFL preseason game, which would be sometime in early August. If this happens in July, I mean, this is just going to be sick. I'll forward through and tell you why later on, because then I really have the rest of the year down pat. But Deutsche Bank is pretty big. I wish I could move all of these things, but I suppose, well, the volume is what I wanted to look at in here. But you know, it's a stock, whatever. The volume is obviously bigger. That's just normal, but not really though. It's 2016 versus like 12 and 11. If they go down, that's going to be a very, very interesting situation, especially because gold and silver is a very much a global price market. And gold and silver has just recently had interesting breakouts. But before we get into that, let's take a look at the Dixie, as they call it, which is in at 96.09. Definitely choppy, which kind of should be intended to be so, given how it is calculated. It takes its fiat debt notes backed by debt. And of course, when you create debt, the basic math should be relatively simple. You might have to take 10 minutes to just really just think about the simplicity of figuring out how the Ponzi scheme of fiat currency is relatively extreme. And when I say relatively extreme, I mean even more extreme than that. It's probably the biggest Ponzi scheme human. This is going to be the biggest story ever. We look hundreds and thousands of years from now about this fiat economic monetary collapse that is pretty much in the happening. So let's enjoy it. Let's watch it. Let's be on the right side of the transfer of wealth moving forward. At least that's where I'm standing. So just the basics of it. So you have a bank that lends you 100 units, $100 basically. So if they give you 100, which is created pretty much out of thin air, and you have to pay interest, let's assume the time comes up and you're required to pay the 110. Well, where did this 10 come from? Because now 110 is in the money supply. And if you think of anything in accounting terms, the terms that was taught when I was in school was accounts receivable, which was debt that people owed you. And that's what can only transpire is a lot of debt, mathematically guaranteed to exist, which is why throughout every and within every single country, or the vast majority of them, and in some cases or particulars everyone, where people in like every country, there's a lot of people in debt, individuals, students with student loans. They're getting the debt hit early on them. And none of this waiting for these long, like waiting to get your house in your 20s and your first few cars were old pickups or just something cheap that you could afford. And then all of a sudden now you put car loans on it and all that type of stuff. Your debts start to accumulate. And when you look around the real world and see everybody you can see how large the debt cycle has hit the people. And how hard does it hit companies, businesses, corporations, franchises? And they have got hit with those debt problems. And even individual countries. How many countries are in debt? And what is the net debt for everyone? The whole world debt is like such a massive number, and yet it's because of that mathematics that it's in place. And who do we owe this to? Some other planet? If Earth is in debt this much, just the obvious fact that the Ponzi scheme has to end at some point. With that being said, let's take a look at gold. Closing the week and the Friday day, almost at 1,400 US of those fiat dollars. Levels not seen in quite some time. Barely, though. And my favorite gauge of indicator for looking at charts was one of my quick ideas that I had sometime back in here about using an 18 average of highs and an 18 average of lows. And I know we don't have much data to precede this, but this was an attempt in 1999 to revert the trend. Because before this, in 1980, gold was like 850 bucks, 800,000, under 1,000, but it was closer, about 850. And then we have these 2 months, September and October 99, where it attempts to do so. So now it comes back, and the 18 average is like that big must hold area. It supports it here, but never does ever. That doesn't. I know that's bad grammar, but it doesn't ever get above it until here, after it already made a couple lower lows, but matching, piercing above the 1999 low. So here's another attempt and doing it. But now I can see within the 18, now it's flat, which it was in here too. But every time it gets out above, it's an attempt. There's another attempt in September of 2001. And then 911 might have, no, actually it couldn't have been 911 would have made it go higher, I guess, because it closed the month higher on September 30th as an up move. But then October comes back, okay, and this time when it came back, it didn't do what it did last time, a few times. It went above here, it went to the lows. Then it went above here, it went down to the lows. Then it goes above here, and then it goes around the closes. And here, this is where it was getting very serious. That okay, we have a situation where at one, two attempts, third attempt. Now with this last one, it held it, and then you had momentum further higher, breaking this resistance. You get the big move, and you can see how bull market started during this entire duration of time. This 18 average doesn't give in. Remember 2008? This is what I call holding and staying above a level. Yeah, it went below it, but it didn't take long to get back. So the uptrend doesn't change, it continues on. And it did so all the way to the 2011 top. Now in the reversal here, the regaining of it, like there was several times, there was one time from the lows. There was, oh, that was it. There was one. There wasn't too many 18 average of lows tests, but it occurred. And in this situation here is where it got interesting. This was the real attempt to regain the trend. Just because the band went flat doesn't mean it's just not going to keep it going. Because if this thing would have went up back in the end part of 2012, then it would have been 18 average rolling high again, and it just would have been another nice little small blimp correction. Of course, that wasn't what happened. So then we have a little bit of retracement, really strengthening the sideways range until, of course, this period in here. 18 average at this point was flat, starting to decline. Now you have to start to give possible momentum towards the downside. And there we have it. We have 18 average resistance test. But, okay, we gave the downside momentum. Here was a shot for it to make a new low. Okay, nice three amazing red candles down, which is something like it's starting to fill a little bit of this empty space. There's a lot of empty space to fill. and you hit the 18, which is a spot where you are resisting. And when you see it in a down move, come to it and start to peel down like that, you oftentimes got to give the benefit of the doubt within one to the next five, six, seven, 8 periods. It's going to have a significant leg lower. And when if it's like 6, 7, 8, that means it might pause a little bit, might make another lower high before the way there or a matching high. So what does it do? Okay, it takes a couple of periods to match the previous low. At this stage, it could take a couple more periods to come back and break down again. It could just keep going lower because that's what these new bear markets usually do at this stage of the time frame. Okay, so this is both bullish and bearish. As I mentioned, it could take several periods to hit like this. What would be probably around 1,000. And here we have it. We wait, we wait, we wait. It is several periods, and there is where it's telling us it's going to 1,000. But oh, it didn't do it. Why didn't you go to 1,000? You were supposed to. You broke down below the support. Okay, anyway. There we go. Now it's going down to that level. Fills a bit more space. Bear market continues. It's been a continuous downtrend because it hasn't even gotten above the 18 average of highs. What it needs to do to attempt to resume or revert into that of a bull market. We continue down further, closer to that 1,000 level, and there it is, that first attempt. This has now taken us to 2016. So it left the bull market in 2013, and it was 3 years of decline. But at this stage, I look at it as just to scream out, "Hey, wait! Hey, guys! Yeah, me, gold market bull. Yeah, I'm going to revert this now. I'm going to resume the bull market." And then the rest of the world and everybody else is like, "Okay, buddy, good luck to you. I'll watch you from the side," kind of deal. And then you get a pause period to the move over. That's always a good bullish signal. But you got to do a lot more after this kind of decline. And you have a nice green move. And actually, I can push the button this way, it makes it easier. Yeah. And all of a sudden, you made an attempt to get the thing back going again, but it came down into play. Okay. So we strengthened this level because it was in here, the 1321, which happens to be the Fibonacci from this level, which is something when you're in February 2016, you already know 1321 and 1522 exist because that level was calculated at the end of 2015. And when you have a situation when you make that attempt, it's either one of two things. It's either what the person stated, yeah, what I'm doing here, I'm going to do this. Either they're going to do it or they're going to fail. And if they fail, it ain't going to be pretty because they're going to get their ass kicked. And the definition of getting your ass kicked here is making the lower low below this little over 1,000 mark. And before I was saying, yeah, it's going to 1,000. Now after this correctionary move, I'd be like, okay, where next? Maybe 850? 820, 810, something around there. Okay, that's the next level of support breaking below. So let's move on. And okay, so now you're breaking down on a bullish level. You pretty much got to hold that level. Okay, so a little bit of a pause move. You can see how the 18's a little flat, and it's so neutral bound at this stage, especially if it's above 1152, because this was just a brief period, only the last half of 2015, and just a little bit below this area. So a lot of times since, of course, this point in that consolidation mode. So you strengthen support, a resistance every single time. You end up in a sideways manner. And every single time you go in a sideways moving market, the break of either the key support or resistance can oftentimes lead to monstrously great events to the direction in which it breaks from. So in a case here, we already know that this there's a double edge range. First one being around 1160 to 1170, all the way down to about 1050. And then, of course, going down below, you see expect, like I say, a fast move, probably into the 800s. And in this case, you'd be expecting at least to break above a bit, above 1522. And what you'd end up getting is a lot of this sideways consolidation. So if this was to break down, why hasn't it yet? Because in a bear market, and you have a failed You have failed breakout attempts all the time. But when you have this red move down, what you don't get is one, two, three, four, five, six, seven, 8 candles where it consolidates like this and then later goes down. Usually, what's going to happen is if it's going to take some time, maybe it might take 2, 3 periods to get to the highs, maybe a couple periods or three to get down to the lows, maybe start to show weakness amongst the 18 average of lows and grind its way maybe towards like this lower end or just stuff like that, show weakness amongst the lows in one form or another. But it's going to have its lower high move from this high bear market, and then you break this support and the devastating move occurs. But that didn't happen. And then you had follow through where it came into in 2017 to that high. And you start to see the 18 rising. You know everything's still neutral in this range. And the longer that you go in it, the better. Now this gets big because January of 2018 last year, this thing is poised for a tremendous breakout. And when you see strength like this, you just gotta let it wait and see. But what happened was it lost its momentum and it went to the 18 lows, continued further. So as mentioned, you've already developed a major support block here. The first level between like in the 1100s. What happens when it gets there? Well, it does just that. It supports it, and it does so with a higher low. And the more often you test any type of key level of resistance or support, then the more likely it is that you take it out. And it also means the intensity of the type of move that can occur when you enter in any type of long sideways reaction can be very big. And we got a couple of them to talk about. One, the obvious one that we can see here, because as it stands now, after it made it to this high, it had a very bullish 4 period segment 1, 2, 3, 4, and then the clear break. It broke all the way to what some people could call the most upper end of this resistance because most certainly since 2016 that key level is 1366 at the highest, and it's already exceeded that point. But in the whole reversal of trend situation, when you have the leaving of the 18, exitation as I've called it, that's when the phenomenal moves happen. And that's why in the outset when I showed it back in the 1990s, at the end of the 90s, start of the millennium, how we seen how it reverted it when it finally had a clear breakout above it. Its first attempt, it was a really, really good one, but it didn't have that failed breakout fast move as we've seen all the bearish sides based on how the reactions were 2016 and on. So another attempt to break it, and it looked really serious again in 2017 all the way here, but it didn't. So that was attempt number 2. And now at the start of this year, attempt number 3 is doing a lot better. And if you think of stuff like playing a video game, you learn the game after playing it more times than not. You get more experience. That's another reference in using it. But a fast move up towards this, like even close to previous and at previous high, seems like a very realistic event. Furthermore, it was a very, very long correction, and you can't see the data going back to 1980. But after it broke this level, it started to get going. That was a clear, concise, amazing move over a span of around one full decade, 10 years, or 120 periods. Now, that's just intense. Now, it wasn't fast as in like 20 or 30 or 40 periods, but it was, I mean, 10 consecutive years without really any harm to its market. And now it's had this long sideways consolidation. So we're at a point where we haven't had much price action north of this 1400 level, but we've had some. From March 2011 all the way to May of 2013, so 2 years and a couple months. So the possibility of rearranging and trading in that possible range has got to be in play as well. That's one thing to look for. That can it trade in that upper end, but we were in clear new bound territories in here, and the same deal can happen in here. That what I'm saying with Bitcoin is going to be the same case in here, especially in the short run as we end the year on the break of 1522. That it's like wild card for how big this rally could get. Because when you have a significant good move, you have a great correction via that of a price and time, and it has to be a really good one, and this was, especially via time. Then, after the completion of that, the moves can just be phenomenal. And when you are overextended and you have situation like best months ever, best four, like 3 periods in a row that's just so big, and that's when you can get situations of having possibilities of like, oh, it's $4,200 gold in 6 months, and I'm a probability odds kind of guy. What's the mathematical chances that something is to occur? And I can't give you the exact number for this, but what's the chances that gold reaches say $3,000 by next year at this time? I'm not going to give you the number because I'm not even trying to think about the number. But the easy mathematical answer, guaranteed, is it's a lot higher than it has been for a long time for that situation. In fact, it's the highest it's ever been. Because back in here, if you were like, oh, say that last year at this time, if you were to ask me, oh, what's the chance? And I'm going to reduce it just a little bit for mathematical percentage gain odds. So maybe 2,600, 27, whatever the exact percentage is, which is like 110, 120. How about we just do 2,800, a 2x move? So the chances of back in here, say at like say 1250, what's the chances of 2,500 for the same essential purposes? The chances were much worse back then. In a 12 period setup, the likelihood of it happening was just bad. But if it breaks out of this level like this after where it has came from in this point of view, well, that really makes it but one of the highest chances it can be. That's another way of putting it. It's in 1978, 79, into the early parts of 1980, when the gold market moved. It did just that, having those type of phenomenal moves in like 2, 3 months. I wish they had that data on here for that time frame. They don't, and I could put it up and show it because I do have the data myself on the spreadsheet. But and I can't even put the 18 average up. I just rather choose not to. But it's done it before in the past many times. And as this market the last few days has went on, we can see in here just different reasons, like looking at the 18 average in here. It's down, so now it attempts to get above it, it consolidates within it, and now it breaks this level, and look what happens afterwards. Look what happens when it leaves the 18 average in here. That's just one of the basic measures of it, but obviously fantastic move on the weekly chart. 3 consecutive amazing weeks in a row. All these markets are overextended. They're going to have to pull back at some point. But now this level of resistance, this big area, it's pretty much a must hold for, I mean, it can pierce below it and all that type of stuff. But yeah, I'd have to say most certainly a must hold area. And, and just for something to do, I'm just going to scroll back and I'm just going to take a look at what the 18 average look like on something just random. Okay, there we go. So let's just wait for. Okay, so here's the spot where it's been declined, trying to break out. It's got to get above this high. Nope, we got to wait. We got to wait. Never did it. Okay, we're going down. It's going down, and I mean, 18 average declining. It's okay. Here's an attempt. Here's an attempt. It's got above it. See, now it's coming back. We're establishing resistance. This is all good. This is great. So there you go. There you go. Right there. Now it's left it. Let's see what happens. Oh, you didn't know. Oh, okay, that was just fluke that I had a good run. And that's why I like the 18 average of highs and lows. So as we play out today, leaving the last time it left the 18 average of highs was here. And then I suppose it's trying to do so now again. Because well, it came back to it's had a nice correction. So we're going to be moving in the week where this thing's got major potential just to even get going first thing. Because it did come down to the 18 highs in here, and then immediately had a green candle up, and then this little nice candle which came back down to it again, then lifted back higher. Now this one happened at 1400 hours. That's 2 p.m. Eastern time. So that's got credentiality to it because it started at 2 o'clock. So it got the last 2 hours of the New York time frame. So everything to me here, and I'll see even better on the single hour term time frame. Okay, there we go. So it's having its battle, but this is where we call strong setup because I like to just look at each individual candle and how does the story make sense to me. We'll start off with a set of six of them though, as you have this move in here that goes from this low to right before the red candle. So let's go candle by candle from that point. You have that red candle down to the lows. So you go from the high to the low. Okay, now that's like always that's the must hold area. And then to get a rebound move back up, that's bullish, but a red candle down, not quite as bad. But now you have two green candles that make it up, and you just do all this for a few periods. It's like screaming out to you. This is showing a lot of strength moving forward. When you see a pattern like this, what this is telling me is that this is poised to have a breakout above the 18 average of highs. And of course, in doing so, is just going to extend daily term gains probably as we move into Monday's session. And I'm not done because I want to go over silver, and I'm already 20 plus minutes in. So I'm going to make it quick. And we'll start with a shorter term 4 hour term time frame, which is just enduring a correctionary phase right now after a 1, 2, 3, like a 4, 5, 6 period move up, however long it was. Broke this level of resistance and a phenomenal move. And we can see right now consolidating within the 18. Single hour term time frame. There we go. Actually, I wanted to go other way, but it's consolidating in there as well. So the daily chart having the breakout, and here it leaves the 18 for phenomenal gain. And one of the things I talk about are the four stages. Stage 1, band flattening out. Stage 2, establish resistance, come back to the band. But preceding this move before it happened, I mean, the move is just because the gold went up, I guess you could almost say. It's underperforming gold during this run higher, hence the reason why it's so much lower than these levels from before. Gold is approaching all time highs in Canada, not that far off in the States, and here it's not only far off from its all time highs, but it's still decently far below its February highs of earlier this year. And when you see how it just shows strength amongst the 18 average of highs like this, there is no surprise that when you see coming in here, does it look like it's going to go higher after this? I mean, and so I still have to say it's the same thing coming through, especially with silver's track record of having extended moves above and below the 18 average. You had this one here, an extended rise, extended decline here. A lot of sideways choppy action back in there. But to see all the previous moves, I like to see less candles, so I can see all that action by seeing less within the weekly term. And we've already resisted this level of support. But you know what? All of this stuff is almost nonsense to the degree. These levels are going to, these prices are going to go much higher at a given time. And I don't know what that given time is. And I said, when a lot of the stuff is going to happen. Well, most likely throughout the rest of the year, you're going to have a significant move higher. But significant move higher for silver, given how beaten up it is and how low its volatility is and where it has to increase to from where we are, might just make a move to around 21, maybe a bit below, a bit above. I doubt it's going to do anything near that 30 number anytime soon, but you got to give it the benefit of the doubt, especially if gold can have some big moves, that you get a follow after effect. Gold gets it done first, silver second. For when silver broke out on its 18 average, here was barely an attempt in here, but this was an attempt. Comes back down to the 18, but establishing resistance is a major event. And it's just a lot of waiting. Okay, there's a statement. It wants to do it. It was like, okay, just yada yada choppy. No real signs in here of it breaking out or breaking down, other than maybe looking at gold at the time. But this is 2003. So gold already had done. I already did this before with gold, and it was well before that. It was like 2001. So in this case, it was like a couple years of a delay factor. And then there's your attempt to do it. How does it do with this attempt? It has a pause period. That is a strong signal that when you see something like that, establish resistance, come back. Small attempt, come back. Microscopically harsh, terrible attempt, but it was an attempt anyway, come back. Very good attempt and pause like that. And you're in at that same area you were before. That gives you probability odds of a big move. So, like I was saying before, oh, what's the chances this reaches, say, well, let's say like 50% gain, like $7.60 in like say 12 months? Well, it'd be a lot higher there than it was back in these previous spots because of the situation we look at here. You get a pause period too, and then continuation. So now it's even stronger. Because how does it hold that move? Well, it held it with like all of it was very volatile up and down, just ironically maybe closing at around that 511 mark. Either way, you see on the setup, if you're looking to just look at charts, I want to buy something, I want to buy something. Well, if I'm day trading something and I'm looking for something to buy, this is where I'm looking at this. I'm pushing the buy button. I'm hoping, like I say this is a 10-minute time frame or whatever. I'll push the buy button and I'll look to sell it at least somewhere up here, wherever that would be, kind of deal. That's my trading philosophy, and there it happens. There it happens. So people say technical analysis doesn't work, or even that. I want to go further than that. Oh, gold and silver. The technical analysis doesn't work in gold and silver because it's manipulated. I mean, I don't that I don't know what else to say. I guess there's a few things I can say about that. Manipulated. Okay. What species of animals is trading the market? Is it the polar bears? Or maybe it's the coyotes. I doubt it's the mosquitoes. It's the humans. Humans are amazing. We manipulate everything. So every market is always going to be manipulated via that other definition. And then I've even heard people say, oh, Fibonacci, nope, not going to use it on it because it's a manipulated market. You could make a shelving unit, and you're going to be obeying Fibonacci levels without even you knowing it. That's the way Fibonacci works, especially with the retracement that I use. When it's now getting closer to 2% of the people that understand the real Fibonacci. So here's these Fibonacci numbers working, and no one even knows how to calculate them. But anyway, that's and then in this here you see this was a spot where it had its correctionary move after this big move. Now it's trying to resume the trend, and it had big volatility. It's following through with decent volatility, and it took a lot of time. And look at how the future setups again would build up for the reason why this was going into double digits. You could see again the bullish setups that come into play. And what happened after this? Well, spoiler, it goes up. So now we're looking for a bullish setup again. Staying below the 18 this entire time. Okay, there's our attempt right there. Okay, back to the 18. Okay, well, it hasn't broken. Okay, well, I mean, this isn't good. Why hasn't it went up? But I mean, we're still above this low. We've got this range bound market, and that's where it stands. Still nothing else. It's not even. It's got to get above the 18 to get to even attempt it. So it's just one of those waiting games and seeing. But just like the crypto markets, I've said so often with them for a lot of their moves, when they're ready to go, they go. And I say that because it tells I say it for two things. One, it can be unpredictable at least at times, or why bother predicting it if you get in your situation where you don't need to? And then two, when it goes, that means it has phenomenal moves in what would usually be a very quick allocation of time. And I am 100%, well, 97, 98, 99 point something even percent, very confident that it's going to be the case. Now, as far as some key long term levels are concerned for silver, how I'm looking at it, and this is just, again, what I think, there has to be, like in a book, there's something that all novels have in common, at least pretty much all of them. They end, they have a final chapter, and it is over. Same thing here. So getting above this level, that's gonna probably have to. Like, I mean, decent level just to start. You'd have to think around like 111. And these numbers that I put in, they actually go further and further, and I could recalculate them at some point. I think the next one is close to 100 though, or 80 or 70 or 80 or something. If we go from, well, let me just do the math on it. If we go from 20 to 31, that's a gain of about 60%. 31 to 17, that's a gain of about a little more than that. So we would be looking at about 84 or so, 82 on the next sequence, 80. But as far as like the long term is concerned, at what price point does it go to where the dollar pretty much starts its hyperinflationary death cycle? And then that's to me the best way of saying it as far as how high silver can go. And I have to believe between $1 to $4,000. And that's just what I'm thinking. And then at that point, oh yeah, you got all like if the dollar goes through a complete death cycle, now you're like, hey, I got 5 million US dollars here. Can I get a couple ounces of silver off you? And you're like, no. What do you think? I'm crazy? I mean, I got enough monopoly money as it is, which it's gonna be a lot better than monopoly money in playing those games. It's much better quality, and you got better denominations as well. So it's gonna have value. The fiat currencies are not gonna lose their value. Plus, they're gonna have historical value. Again, the biggest story I think that's gonna happen is gonna involve three things as far as money items: the US dollar and all the other world currencies, pretty much, precious metals, gold and silver, as well as cryptocurrencies, Bitcoin and the other ones. In the year 3200, however history is being explained, this will be explained. So to those people who are watching this video, many hundreds and thousands of years from now, how do you do? This is the year 2019. One of the reasons I do these videos is to wonder if, say, year 2400, 2800, if it's actually going to have an effect. And just like sending a message in a bottle kind of deal, a letter in a, whatever, and just trying to leave a stamp. Everyone, historical ages, just leaving sculptures and art and whatever they can to stay on the planet for after they pass on. I've already done that. I got thousands of videos, it seems, that who knows what's going to happen, how they're going to play out in 2200. Maybe they'll be deleted and they'll be gone. I don't know. But maybe they won't be either. But before 2200 occurs, there's going to be a time where it goes 200, 400, 600, 800,000 like it's no tomorrow. I humbly believe that to be the case. And maybe it could be like cryptos and this thing go to like 20, 30. Well, cryptos, Bitcoin hasn't been to 30, but go to like 10, 20,000. and it's just a phenomenal, massive move up that occurs within the markets. But then after that, it works out to oh, silver is priced in what else? It's priced in gold. It might be priced in a cryptocurrency, it might be priced in this, and maybe everything else is priced in silver. Those are all possibilities. And again, back to the topic that I was forgetting about monopoly money for US dollar, why it has its value. A good idea might be to try to keep your bills in the best possible condition that you can. Because I know right now if you sell them on the market, which is like going to a store, it doesn't matter if you crumple it up or maybe you just take a mark and write a bit to it, it's just gonna still gonna be transferred. But in the year 2047, um, if there's a collector's item for these old currencies, they're gonna want better quality. But the more that I think about this, the more I'm starting to think back in history as a hockey card collector. There was a hockey card set called Pro Set that came out around 1990 when the card bubble started to take off. That was an inflationary bubble there too, by the way, the sport cards bubble at the start of the 1990s off. And they made a whole shitload amount of these cards that, well, I mean, there isn't even a card worth probably 30 cents in the set. It's terrible. And basically got to the point where you could buy a whole box of cards for $2 or $3, let alone a pack was $3 for some back in the day. It got so bad. There's just so many, and just they're just junk. They're pretty much useless, and they were highly overinflated. And that's the same thing as I look at the fiat debt-based currency. I'm surprised this lasted as long as it has because it was again this time in here. I'm just going to auto this. It was this time in here where you could get all the information like money as debt, zeitgeist addendum, and there were a few other ones along the way, and even ones that would follow through in 2008 and 2009. Hidden Secrets of Money starting to come in. That's the best one out there, and it's a good multi-series. So people are finding out about this. It's just common to say the word to pay in fiat. There's so many references by like companies talking about their money as fiat. I've seen more and more of that. But it's still a long ways to go for the mainstream idea of people realizing things like how phony and how really, really bad it is within the, uh, the currency model. And it's either you remain not knowing or you don't. But if you understand how fraudulent these systems are, the fiat currency, you're not going to understand. At least one in a million might, if that even that. And that means the number of people that change and how much people understand or don't understand will now work in sort of the death birth ratio. I mean, death completely, yeah, because that's one extra person off the planet. But birth in the sense of like people that are like 14, 15, 16, 18 entering adulthood kind of deal. Those are they're the ones that are replacing, of course, the older generation. And in a sense like that, there's going to be a lot more of these kids that are going to be raised from people that have been hoarding silver and gold since they were maybe 5 years old and now they're in high school kind of deal. They've heard the word fiat since they were 4 years old, and again they're in high school. So you're going to get classes like that. Then you're going to get those who have no idea, 15 years old, that are going to learn for the first time like a 25 and a 60-year-old can today. So you can only go so far, and I mean, once you get to a certain number, then it's got to happen. And with the cryptocurrencies moving as they are, and they're the ones that are going to probably explode very far. That's the one I got the best read on. I wouldn't be surprised at all if they just pick off and then more people, just because you get into cryptos for the first time, you learn about things like that. You learn about how bad this system is. And if you want to accumulate precious metals, one of the more strategic ways of doing so is to get into cryptos, use trading systems like the ones I talk about, and then during times of profit taking measures, well, you literally turn them into gold and silver. Places like JM Bullion, Silver Gold Bull, or turn them into precious metals, and you can accumulate a large quantity. It'd be an interesting example. If you take two people right now, one person goes ahead and buys an ounce of gold and 90 ounces of silver, and another person buys the same amount that in cryptocurrencies, and then starts just trading it back and forth. And then when they get to peak times, they'll buy gold and silver in increments. There's a very good chance that that person who does the second one in about a year and a half from now is going to have a lot more than the equivalency of 1 ounce of gold and 90 ounces of silver. And again, that's a strategic measure because what happens is Bitcoin prices go much higher, altcoin prices go even higher than that. You trade them back and forth to even gain quantity of those coins, and then they go up big and you sell some. Keyword is some. So you keep trading, and then they go up again more, and just rinse, repeat, rinse, repeat, rinse, repeat. And you could end up being at the point where, oh, I got 8 ounces of gold and like 2,000 ounces of silver. Those levels are not out of whack. But again, your risk, your reward. Thank you for tuning in. Have yourself a great day. Bye bye.